Is giving your kid an allowance, is that tax deductible? If you ask any CPA, the answer is no. That's not a tax deductible item because it's a personal expense. And personal expenses are not tax deductible, but there's a way to make it tax deductible. Hello everybody, this is Ihab. Let's talk about how you can make your child's allowance into a tax deductible allowance. Now, one of the advantages of having your own business is that you can hire your own family to work for you. And one of the best ways to teach your children about business is that you can have them work for you so they help around, and at the same time they learn the principles of business. Not only they'll understand the basics of business, they'll learn discipline as well, and at the same time, they're making money. No matter what business type you have, you can hire your under age of 18 children to work for you. Now, payments for the child for any services that they're doing for you, if they are under the age of 18, and if they're working for their parents in a trade or business, these payments are not subject to Social Security and Medicare taxes. As long as the business structure is a sole proprietorship or a partnership where both parents are the partners of that partnership. Now, that kind of contradicts what I just said, that no matter what business entity you have, you can hire your children. But there's a workaround for this. Let me just explain. Now, even though those payments are not subject to Social Security and Medicare taxes, but they're subject to withholdings, and I'll tell you why you don't even have to withhold taxes, and I'll explain the numbers for you. So if you have an S-Corp or a corporation or a partnership where your other partner is not your spouse, then can you actually hire your children and make it a tax deductible? Yes, there's a workaround for this. Now, what you can do at that point, if you are an S-Corp or a corporation or a partnership, you can establish a sole proprietorship, for example, call it like a family management company, and have your child work for that sole proprietorship. He's getting paid, he or she is getting paid through that part, and have your child work for that family management company. So the payroll is going through the family management company, which is a sole proprietor, and then at the end of the year, your S-Corp or a corporation or a partnership is going to turn around and reimburse the family management company for the payroll for the child. That way, you're still getting the deduction for hiring your child, whether they're working directly under the S-Corp or under the family management company. So that way, you're still getting the tax deduction for hiring your child, even though they're not really directly under the S-Corp, they're working under the family management company, but the S-Corp is reimbursing the family management company for the payroll. So think about it that way. That money, you would have to given it to your child regardless, whether it's an allowance, whether it's paying for tuition, whether it's paying for, his sports activities or whatever the case might be. So even though when you hire your children, you're paying payroll taxes on the amount of money that you're giving to your children, at the same time, you're shifting the income from a higher tax bracket, which is your tax bracket, to your children's tax bracket, which is a much lower tax bracket than yours. Now remember, you have to have a legitimate work for them to do in order to earn that money, and make sure you document everything in case of an audit. That way you're covered. In 2021, you can pay your child $12,550 a year without paying any federal taxes at all. And that's a perfect opportunity for you to use your child's money towards retirement savings. What you can actually do, you pay them the $12,550, which they're gonna owe zero taxes on it. Any penny above that, they're gonna owe taxes on it. But guess what? You can pay them $6,000 above that amount, and that amount contributed to a traditional IRA. A traditional IRA will give you a tax deduction for the $6,000. That way they still owe nothing on the money. So now that $6,000 is under the traditional IRA. Then later what you can do, you can turn around and make a backdoor Roth IRA and then convert it to a Roth IRA. And now that money is gonna grow tax-free for the future. The only tax law requirement for you or your child to contribute to an IRA account is to have an earned income for that amount that you have contributed for the year. Age is completely irrelevant for the IRS, as long as your child is earning that money, and then they can do whatever they want with it. So even if your child doesn't work for you or work for your company, as long as they're working like a summer job, a part-time job, or any job they're making some kind of money, they have an earned income, that earned income qualifies them to contribute to a retirement account. For 2021, for example, the limit to contribute to a Roth or a traditional IRA is $6,000 per year. For children, it is always best to go with the Roth IRA option, and I'll tell you why. By making Roth contributions for just few years in their teenage years, your child can accumulate a lot of money by the time they retire. But let's be real, a lot of kids, they're not going to contribute $6,000 a year no matter what. We have a hard time convincing adults to do that to begin with, let alone teenagers. But let me tell you how you as a parent can do that on the behalf of your child. So let's say they work for your company and you pay them an X amount of money for the year. You as a parent, you decide part of that money you're going to take before you even give it to them, you're going to take and invest into a Roth IRA on their behalf. And I'll give you a scenario where you're only doing it for 4 years, for example. Let me give you a scenario where let's say they started working for you when they're 15 and they quit when they're 19. And they're only contributing for 4 years for a Roth IRA. Let's say they contributed $1,000 at the end of each year for 4 years only during their teenage years. Now, assuming the historic 10% market rate, the rate of return that we're getting on the market, S&P 500 for example, is going to be the same. The Roth IRA account is going to be worth $250,000 by the time the kid is going to be 60 years old, which is in 45 years. Again, assuming they only contributed for 4 years, $1,000 each year. Period. They never touched it again. Now, let's say your kid started contributing $2,000 instead of $1,000 at the end of each year. Same assumptions. 4 years, only 10% rate of return. That Roth account would be worth almost $500,000 by the time they are 60. And again, they're only contributing 4 years only, and that's pretty much it. They don't touch it again. Let's have even more fun with the numbers. Let's say they contribute $3,000 for the whole year for every year for 4 years only. And that's pretty much it. Again, assuming 10% rate of return, that Roth IRA account is going to be worth almost $750,000 by the time they're 60 years old. And guess what? That money is completely tax-free. Now you get the idea out of this. With relatively modest contributions for just a few years, the Roth IRA accounts can be worth a lot of money when the kid retires. So I highly encourage you to do that when you're hiring your own kids and saving for their retirements. So again, if you want to hire your kids and have your allowance that you eventually going to give them no matter what to be a tax deductible item, then make sure that amount that you're giving them is documented, the work they're doing is documented, and if you're a sole proprietor or a partnership where both you and the spouse are the parents, then you're okay to hire them directly under those specific entities. And if you are an S-corp, a corporation, or a partnership where your other partner is not your spouse, then go ahead and create a sole proprietor, which is a family management company, hire the kid underneath that family management company, and go ahead and have the S-corp and the corporation reimburse the family management company. That's it for me today, guys. I hope that was helpful. Again, if you're new here, consider subscribing. We talk about everything personal finance, money, investing, and taxes. Hope to see you next time.